This is going to be a review over March the 7th. So coming into the day, we opened up slightly below Friday's close. Here's the high of last Friday, low of last Friday. And as you can see, kind of had an expanding triangle over the past week. And trading range here, called a wedge, bear flag. We ended up selling off on the open, but broke below here and then broke below here. And we're breaking below this range. Close this gap over here. And it was a small pullback trend day. And the problem with these kind of days is it looks weak. It looks like a bear leg in a trading range, but it keeps going down and down and down. And on a 15-minute chart, it's tight. 30-minute chart, tight channel, 60-minute chart. And it's a leg in a trading range. You know, bear bar, bull bar, bear bar, sideways, bear bar. It looks like a bear leg in a trading range, but it's really, really tight. So let's look at it like this. So first bar of the day, big bear bar, close on low, but in the middle of the prior day's range. Low probability short, so better to do nothing and wait. 3 consecutive bear bars, probably always in short. Odds are you'll go at least a little bit lower. Possible wedge, 1, 2, and 3. First look probably will fail, but again, if you're selling, you got to be quick to make decisions and could easily get a failed breakout of this low or this low. Bad follow through here, so may get bad follow through after this bar. More or less the same. And then we get a big bull bar closing on its high. It's a micro channel from here. First low is probably going to fail. Failed breakout of down here, so probably better. Some bulls will buy above and buy more on another bull bar. Other bulls, probably better just wait for second entry buy. Outside down, surprise bar. Bulls that bought there probably would use this bull bar if they buy above it to get out at break even. You can see they did that right here. So what I mean by that is, if I can click the right button, bulls buy this close, buy more here, and arguably they couldn't get out break even. So some did. You buy here, maybe you double your position here, maybe you got out break even, but a lot of bulls were trapped. And bear bar, no follow through, but again, it's really easy if you got to be quick. If you're buying here, buying more, you got to get out really quick. So I wouldn't recommend that. Traders, if they bought, probably best just stop themselves out here. They could buy here, but it's a very weak bar, so not a great buy either. You can argue second entry, failed breakout of prior day's high, failed breakout here. But again, this is probably enough to surprise you going at least a little bit lower. Bear bar. And the bulls they couldn't get another stop entry, so it looks like the bears are giving up. The bulls are giving up, and the bears are going lower. And this looks weak, but gap, maybe gap here, gap here. These are all negative gaps, and we have an obvious gap here, so you have to wonder if we'll get something like that. And we didn't get it there, but we got it here. Maybe we're going to get something like that. Well, I'll come back to that. Let me do this. So, consecutive sell climaxes. Some bulls would get out and look to sell again below another bull bar. Like maybe here. They get out here. Maybe they get out here. Big bull bar, but tight channel. First slope's probably going to fail. And strong enough bull breakout, first slope down may fail. And 2 legs up, you can call it a wedge. 1, 2, 3. Some bears will sell this close or below this bar, betting on some sort of double top here and measure move down. And got the bear breakout, probably going at least a little bit lower. Disappointing here. So it's a sign that bears are buying back shorts at new lows. Bulls are buying for scalps. But bulls are also selling at the moving average, and bears are selling at the moving average. Low one short here, probably buyers below, and at least a second leg up. And we ended up going lower. II consecutive inside bars, outside down, 3 pushes down, but it looks like a bear leg in the trading range, but the channel is really tight, so it's hard to sell new lows, and bears are selling pullbacks. Bulls probably get out anywhere, here, and big bear bar, tight trading range, not a good stop entry, and really this whole, some bears will sell here, and I just want to make one thing clear. None of this it's easy. It's not that easy. And, here, a lot of bears aren't going to sell. They'll wait for smaller risk and maybe another push up to form a triangle here, a couple legs down, and then reversal and another bear bar. They'll sell here. So bears are scalping. Bulls are trying multiple times. And the bulls just keep failing at the moving average. Some bears will trail stop, so new breakout, move their stop up here. Rally, bear breakout, move their stop here. Bear breakout. If they move it here and get stopped out, maybe they look to sell again below here or here. And some bears they'll sell, they'll get out here, and they'll look to sell again here. And here they're getting a lot of bear bars. And then we get another bull bar, possible wedge bottom. But again, forcing you to buy in the middle of a trading range, it's not a good buy. And 3 consecutive bull bars up, but possible triangle. First close, far above the moving average. Bears are going to sell it. Bulls are going to take profits and try to form another higher low. Bear breakout. Bulls got another bull bar and outside down. And we just kind of kept selling off. So I want to get kind of talk about the big picture for a minute. This is a difficult day. And it's difficult for the reasons I stated earlier. It looks like a bear leg in a trading range. Here, bear leg in a trading range. Bear leg in a trading range. Sideways, bear leg in a trading range. And it's disappointing. So overall, it's really tempting to look for bottoms. And the reason it's tempting to look for bottoms is traders are selling on limit orders. Every time it gets the moving average, they're selling here, 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 and here. And they're buying below breakouts. And sometimes they're buying, bull closes and scalping out, buying a bull close, scaling in, scalping out, buying bull close, scalping out, buying a bull close, scalping out. But it's really difficult to do that. So overall, when you see a trend from the open and you see this, you see follow through, 3 consecutive bear bars, look to sell. And, if this is too strong to the downside, wait for a second entry buy and preferably maybe wait for a trend line and a retest of the lows and micro double bottom, and then you look to buy. But this isn't that strong and we're starting to break to new lows. So 50-50 chance you're going to get a downside breakout. And at this point, maybe you start selling closes. But if you do, it's hard to, maybe you sell stop up here. 3 consecutive bear bars, move your stop here. But it's really hard to do that because, again, for what I stated, consecutive sell climax is far away from the moving average. You're probably going to touch the moving average. So a lot of traders are looking to sell higher. Some will sell that. Others will wait for a second entry. And yeah, so I wouldn't. The main thing with this day is it looks like a leg in a trading range that keeps grinding down. So I would just be very cautious about being too aggressive on a day like today. And realizing this is the daily chart. So if you look at the tail, here's the open. Let me get a sip of water. And let me do it on a 5-minute chart. Five-minute chart. Here's the open, 18.5. Here's the high, 21. So it went up 3 points in one tick. So 3.25 points above the open and sold off for the rest of the day. So this doesn't look strong, but it's an incredibly strong sell-off. And it's probably more or less a vacuum. So on the open tomorrow, what do we expect? Well, the bears are probably going to get bad follow-through. Maybe some sort of bull bar. The bulls want something like this, and the bears are hopeful that will fall below here. Right now, the bears see a wedge bottom, and they're hopeful that this will lead to 2 legs up. And will it? Who knows? It might, but probably 50-50 chance. And this is the start of the wedge, and we have to get one more new low. So 1, 2, 3, and then we get 2 legs up. The next problem the bulls have is traders don't know if this is going to lead to a test of the all-time high, or do we rally and just simply go sideways for a year and then decide on if we're going to get a breakout to a new high or just go back to the lows.